It seems a lot of big traders, they came back from vacation and now they're expecting much more. There's a consensus that you're going to have a hawkish Fed on Friday. And I think if you take a look at all the inflation drivers, we have severe heat, we have drought concerns that are going to keep food prices elevated. The global energy crisis does not seem like it's ending anytime soon. So we're probably going to be dealing with inflation still being stubborn throughout the winter, which totally supports the idea that the Fed will have to remain an aggressive stance. So risk appetite just ran away, and you saw some really strong moves, especially with the U.S. dollar, and that's probably going to gain some traction as recession fears across Europe are really intensifying, and still here in the U.S the consensus is still leaning maybe U.S. recession some point end of next year. But I think right now you're seeing a lot of safe haven flows go into the dollar, and that's probably a safe trade for right now.
So when we saw what happened with equities, do you think this is confirmation that this has been a bear market rally?
It seems so. I think right now, the writing's on the wall. I mean, so much of Wall Street is anticipating that, we're going to be in a very choppy environment, that stocks are going to struggle in the short term. And I think, treasury yields are rising again. And I think you can't get around inflation. I think, this market is just set on inflation. And right now, everything suggests inflation is going to remain with us for quite some time. And we're really starting to see large parts of the global economy look weak. China's been easing now, and I think there's expectations they'll do more. And I think this global energy crisis, especially with natural gas and the Nord Stream 1 pipeline, this is, a big risk event right now, and that could really cripple so many European economies.